Q3FY24 earnings conference call of Finolex Industries Limited, hosted by ICICI Securities. As a reminder, all the participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Arun Baid. Thank you, and over to you, sir.
On behalf of ICICI Securities, I welcome you all to the Q3FY24 post-result call of Finolex Industries. From the management side, we have Mr. Ajit Venkatraman, Managing Director, and Mr. Neeraj Kedia, CFO. Now I hand over the call to Ajit for opening remarks. Post which the floor will open for Q&A. Over to you, Ajit.
Thank you, Arun. Good morning, ladies and gentlemen. Wishing you all a very happy new year, 2024. Welcome to the investor conference call, the Q3 FY24 earnings release. We thank you all for continued support and interest in Finolex Industries Limited. Q3 FY24 continued to report strong operating performance despite fall in volumes on a year-on-year basis. However, despite strong volumes base in FY23, due to high pent-up demand, overall our volumes on a YTDS basis has been a healthy growth backed by stable prices and consistent demand in both rural and urban segments. Let me give you some of the performance indicators for the first quarter. Q3 FY24 highlights. Total income from operations was 1,119.67 crores for Q3 FY24, down 9% against 1,124.76 crores in Q3 FY23. EBITDA increased by about 31% year-on-year to rupees 119.90 crores in Q3 FY24 compared to rupees 91.87 crores in Q3 FY23. EBITDA margins during the quarter increased on a year-on-year basis to 11.76% compared to 8.17% in corresponding previous quarter of Q3 FY23. The company reported profit after tax of rupees 89.21 crores in Q3 FY24 as compared to rupees 72.07 crores in Q3 FY23. Now getting into segmental performance, pipes and fittings. Pipes and fitting revenue decreased by about 8% to rupees 991.61 crores in Q3 FY24 from 1,077.15 crores in Q3 FY23. Volumes in pipes and fitting segment reported a fall of 10% year-on-year to 81,312 metric tons in Q3 FY24 against 90,396 metric tons in corresponding last quarter. This was primarily attributed to weak agri demand. The plumbing and sanitation volumes have been growing in a healthy double digit on a quarterly and also year-to-date basis. The EBIT in pipes and fitting segment, on the other hand, has increased by about 8% to rupees 74.24 crores in Q3 FY24 compared to EBIT of 68.90 crores in Q3 FY23. Moving to PVC resin segment, revenue in resin segment decreased 36% year-on-year to rupees 321.07 crores in Q3 FY24 compared to 504.09 crores in Q3 FY23. Volume in resin segment decreased 32% to 43,737 metric tons in Q3 FY24 against 64,696 metric tons in Q3 FY23. EBIT in resin segment stood at 30.88 crores in Q3 FY24 compared to 12.43 crores in corresponding previous year's quarter. The company continued to have a strong balance sheet with a net cash surplus of roughly 1,570 crores as on 31st December 23. Now let me leave the floor open to questions. Thank you.
Thank you, sir. So now we begin with the question and answer section. Anyone who wish to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. And the first question is from the Keshav Lahoti from HDFC Securities. Please go ahead.
Hi. Good afternoon. Thank you for the opportunity. So wanted to get a sense, there has been some raising price correction in Q3. Is there any inventory loss involved?
Neeraj, would you like to take that?
Yes. Am I audible?
Yes, you are.
Yeah. Hi, Keshav. Good morning. So you're right. See, when the quarter began in October, there was a sharp reduction of 11 rupees in PVC prices in a matter of 12 days. So that did have an impact on the profitability. In our case, see, because we use our own resin, so it is difficult to quantify the exact amount of inventory loss. But yes, due to that decline, there was some inventory loss. But if you look after that, during the quarter, there was a correction of 5 rupees over the period of the quarter. But on a net basis, during the quarter, we had some inventory losses.
Understood. What is the sense on the demand? Like H1 has been pretty strong for pipes volume, but we have seen some softening in quarter 3. How should we read it, and what sort of volume growth you are looking for this year? And color would be helpful, like demand agri-wise and plumbing-wise and CPVC-wise. Yeah.
Keshav, in terms of demand, the demand in agri segment had petered out a little bit during the quarter. It started from Q2 and persisted in Q3. In terms of non-agri segment, we have seen some robust growth. We have grown almost in a robust high double-digit numbers, and therefore going forward, the strengths in the segments are very strong. Construction industry, we continue to see a growth upwards of 15%. And agri demand, we have to wait and see. We expected single-digit growth, but we have seen a delay in the market picking up yet. And this was mainly due to PVC prices being a little bit unstable throughout Q3.
Okay, understood. So your agri pipes would have seen a sharp degrowth in quarter 3 year-on-year. What would that number look like, and how is your quarter 3 agri and non-agri mix?
Keshav, I'm finding it difficult to hear you. Can you speak into the microphone, please?
So I'll answer it. So,
yeah, go ahead, Neeraj.
Yeah, so Keshav, our agri non-agri mix in Q3 in terms of volumes was 32-68. Okay. Hello, was I audible?
Yeah. Got that number. And what is the agri degrowth in Q3?
See, that we don't give that number, to be honest. You can figure it out yourself.
Okay, understood. I got a broader sense. Thank you. That's it from my side.
Thank you. And the next question is from the line of Karan Bhateria from Ancient Market Securities. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Sir, just wanted to understand, given the ongoing global supply chain challenges because of Red Sea, any difficulty with respect to sourcing of EDC, VCM, and how do we see things shaping up for next 3 months?
So far, we have not had an impact yet, but we are holding a very close watch on the emerging situation in the Middle East, especially for shipments, and we are monitoring the situation. But as of now, we have not had.
Right. So we've got strong inventories of 2-3 months when it comes to EDC, VCM.
Can you repeat that question?
I'm saying, do we now have 2 or 3 months of inventory of EDC, VCM, at the company level?
Yes,
No,
we are covered for the next
so
couple
we
of
don't-
months.
Yeah. So just to clarify, we don't keep 3 months inventory of EDC VCM, but as Ajit is saying, we are covered for the next quarter. We don't see any challenges as of now on any procurement of either EDC VCM or LC.
Right. Thanks for the clarification. And on Finolex Plasson, how do we see infra as a segment growing for FY24 after phenomenal volume growth in the infra segment for FY23?
You're talking about Plasson or about us?
No, so for Plasson and for infra as an industry as a whole. So how do we see that shaping for FY24 on a very heavy base of FY23?
I'll try and answer your question the way I understood. See, as Ajit said earlier, even this year, while if you look at our overall sales volume, it's single digits, but our plumbing and sanitation sales in terms of volumes, they are upwards of 15%, even on a YTD basis. So infra is going strong, and our sense is that this should continue even in the next year.
Right. Great. Thanks for all your clarification. That's it from my end.
Thank you. And the next question is from Sneha Talreja from Novama Company. Please go ahead.
Good afternoon, sir, and thanks a lot for the opportunity. From my end, firstly, when you said volume growth, what is the kind of a volume growth we are likely to see in this particular year? Earlier, we were guiding for 15%. But looking at the run rate, we are at 7% YTD. What should we expect for FY24?
So when you look at volume growth, you need to look at it from two different segments. The agri segment, we were expecting a high single-digit growth for the year, which was true till September. Since September, we have seen a significant slowdown in the agri segment, and in the construction business, we were looking at upwards of 15%, as the construction industry itself is going upwards of 15%, which we continue to give the direction of 15 plus growth in the non-agri segment. The volumes in agri segment have not recovered yet, and we are expecting the market to open up soon, because Q1 and Q4 are the strongest segments quarters for the agri segment.
Right. So that's what my understanding was, that the real quarter is expected to come in. So what's your expectation in agri? Is it looking up? Because Q4 is the main quarter along with Q1.
Correct. So we are hopeful, but it's very difficult to predict. Yeah.
Sure. Along with that, any reduction in PVC prices that you're seeing, given that there are supply disruptions globally which have just started to pan out? Are we seeing any sharp up move in PVC prices from here on?
The PVC prices have been range bound so far. We have seen the prices range between $750 and $800 per metric ton. At this point of time, it is still range bound, and it is almost at the lowest point at this point of time. It is between $750 and $770 per metric ton, and we expect it to be in this range bound. In this range itself. So we don't see any specific reason why the prices should increase.
Understood. And how has CPVC pricing been faring? Has the bottom again there been made, or are we still seeing some cooling off of prices?
So CPVC prices have been on its way down, and it has been at the lowest point yet. So that is again a wait and watch. It is not directly correlated to the PVC prices.
Understood, sir. Thanks a lot, sir. I'll get back in the queue for further questions.
Thanks.
Thank you. And the next question is from the line of Miraj from Arhan Capital. Please go ahead.
Thank you for the opportunity, sir. Just wanted clarification on a couple of things. First is that I wanted to understand what kind of response are we seeing from our channel partners given to that coming soon, the agri demand is supposed to pick up. So, what kind of response are we seeing? Are they waiting to play out if there's any further fall in PVC prices, or is there a decent response from there?
So, thanks for your question, Miraj. The PVC prices are at probably its lowest point yet at this point of time, and it is between $750 and $770 per metric ton. So the channel typically waits for the prices to fall in order to pick up inventory. So we are waiting for the markets to open up at this point of time. The market has been fairly lukewarm most of Q3 and the first 2 weeks of Q4.
Understood. Okay, so we're still waiting for them to pick up on sales from the channel partners. And so secondly, wanted to understand that the remainder land parcel that we have, I believe it's close to 36 acres. Are we planning any sale on that front, or are we still planning to keep it with us?
Neeraj, can you take that question?
So here, see, it is a non-core asset. So board had clearly mandated us that we need to dispose this off. We are still trying to sell it off. We were able to sell half 2 years ago. Half is still remaining with us. Nothing has been finalized yet, but the intent is to dispose it as soon as possible.
Understood. Are we in talks with anyone for the land yet, or it's still in a very early stages?
Talks keep happening. Because obviously when there's a land, you continue to pursue some of the buyers. So discussions keep happening, but there's nothing concrete as of now.
Understood. Okay. Thanks a lot and all the best, sir.
But the intent is to dispose. That's very clear.
Intent is understood. Okay. Thank you so much. So just one last part. Can we have some clarity on what would be the value of the land of the 36 acres?
It is 35 acres, not 36 acres. We had 70 acres, and when we sold the first 35 acres 2 years ago, we made a net gain of 376 crores. So whatever we get now from the remaining should be at least more than that. That's our view.
Understood. Okay. Perfect. That's very clear. Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. And the next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good morning. Am I audible?
Yes, you are, Rajesh.
Okay, sir. So first, a few bookkeeping questions. Could you share the agri mix in volume and value term in Q3 and for FY20 9 months FY24, please?
Yeah, in volume terms, this quarter we had 32%, and overall also for this YTD, which is around 32-33%. Value generally we don't give because this is not a separate segment, but volumes are what I told you.
Okay. In terms of the for the Q3, what was the filing EDC and VCM prices, and what are the current ranges for these three?
Sure. So for Q3, I would say PVC on average was $787. EDC was $322. VCM was $645. So the PVC EDC delta was $465, and the PVC VCM delta was $143. If you look at it today, I have 1 week old numbers with me. No, these are the latest numbers in fact. PVC is at $760. EDC is at $350. VCM is at $620. The PVC EDC delta is $410, and the PVC VCM delta is $140.
Okay. Great, sir. In terms of the business, how are you looking at your CPVC? I understand you have stopped sharing the numbers for that. But what is your view, given that we were around 4 to 5% of the total volume, until last year? So what is this view, given that resin supply domestically is increasing? So are you looking to increase this segment significantly from 4-5% level? And if so, what is the, what level you're looking at?
This you're talking about the CPVC segment, right?
CPVC, sir. CPVC pipes.
All right. So the CPVC pipe segment is a growing segment for us. And we have been showing steady growth in the last 3 to 4 years. And it is going to continue to increase its contribution to the overall business for Finolex Industries. Because most of these pipes go into housing, apartments and housing. And the need for hot water and cold water pipes is going to be existent across. And that segment is growing anywhere between 15 and 20%.
Okay. So on a small base, you are not looking any significant, given that McKinney fine paint and then Liverpool next year would all be McKinney fine paint has already increased capacity significantly, and even Liverpool capacity will come next year. And so for the domestic supply increasing and you already being present in this market, what is your outlook from this 4-5% currently? Could it be significant, say 10-15% level?
Rajesh, in the CPVC segment, we have been outperforming the market. Yeah. And there is no constraint in terms of CPVC availability, either through imports or local supplies. And we have capacities to meet the market requirements and the growing market requirements within the company at the moment.
Okay, understood. So the resin availability would not be a trigger for you to exponentially increase the volume. So this is your growth potential, your growth trajectory. Understood.
Right.
And so you mentioned that you have some inventory losses. I understand you will not be able to separate it segmentally, but on a total basis in Q3, what could be your inventory losses, which you have booked in numbers?
As I said, in our case, because we make our own resin, it becomes slightly difficult to compute that number. Okay, but on a quarterly basis, full quarter, net basis, the prices were down by 6 rupees. Okay, and we generally carry a stock of in pipes and fittings, roughly 20-25,000 tons. So that can give you a ballpark. But in our case, to be very honest, because we use our own resin and we make our resin, this becomes a bit difficult.
Okay. No, I'm asking, if you have booked in your accounting, if you have accounted for any losses. I understand.
No. So in accounting, there has not been any inventory write-downs or NRV provisions. If that is your answer, that is your question.
Okay, sir. Great. Lastly, on this land sale and all, whenever you do, you generate handsome gains. So what are your capex plans? You also sit on good amount of cash. So what about any expansion plans across both the segments?
Yeah. See, on the resin side, I think it's very clear that we are happy with our current capacity, and there is no plan to enhance any capacity on the resin side, especially given that it's a commodity business. We did it, decades ago because that was the need of the hour. But right now, it's a small facility doing very well on its own. So there is no plan to enhance capacity there. We'll continue to do a capex of what is required to maintain the facility, which is around 100 odd crores every year. On the pipe and fitting side, if you recall, in March of last year, we set up a new facility for fittings. We also added some capacity on a modular fashion in our pipe plant. But in a couple of years' time, we will probably require some capacity enhancement. When the time comes, we'll let you know. But for the time being, what I can say is, on a guidance basis, 150 odd crores of capex on an annual basis for the next couple of years, you can assume.
Okay. Great, sir. That's all from my side for now. I'll come back in queue. Thank you.
Thank you.
Thank you.
And the next question is from Utkesh Nopane from Bob's Capital. Please go ahead.
So first question is on the cash flow part. So if I see over the past 7 quarters, we have generated a positive cash accrual of 575 crore when we do the addition of net profit plus depreciation. And I believe that there would have been also a release of working capital due to substantial decline in the PVC resin prices. But our net cash balance has remained at similar level at 1550 odd crore over the past 7 quarters. So can you please explain where we have deployed around 600 crore of cash over the past 7-quarter period, and how we are planning to utilize this surplus cash going forward, which we are carrying in the book?
See, you actually, So you actually answered part of your question. Some of the cash which actually got released from into working capital because PVC prices came down. And if you look at it, last year in Q2, we also incurred loss because of the sharp correction in PVC prices. I mean, I don't know how to answer this further because the cash position that you see is net of our short-term credit, short-term borrowing that we take in terms of buyer's credit. During the last 7-8 quarters, we have also paid out dividend, and there has been capex. If you want to understand this in probably detail, I am happy to have a conversation with you later. But it's very clear in our books the way cash is built there.
So you are saying that this 600 crore of cash which we have generated mainly through operation has been deployed only in the form of capex and dividend, because for our working capital requirement, the cash would have got released from the system of the decline in prices.
Yeah.
And how much capex we have incurred in this 9 months of FY24?
Can I answer this question in a minute?
Yeah, sure. And how we are planning to utilize the existing surplus cash balance going forward?
See, as I said, this large cash is at point of time need to be returned to the shareholders in one form or the other, either a dividend or a buyback. Whenever the board decides, this will probably go back to the shareholders.
Yeah, we have been hearing on this point again and again, but it's been quite a long time. So what would be that trigger which we are looking at to come to the decision point?
There is no specific trigger per se, to be honest. It will happen.
Okay. And do we have any plan to enter into new product category like infra pipe and tanks in near future?
Utkarsh, let me take that question. The current agri and non-agri segments both are large enough for us to grow in these segments. And we are not looking at diluting our focus from these two segments.
Okay. And sir, on the PVC resin side, are we facing any issue on the availability of PVC resin raw materials, that is VCM and ADC? Because if I see our production has been on a lower side on a consistent basis compared to what we were doing during pre-COVID period.
Yes, Utkarsh.
Yeah, so this year we have...
Go ahead.
Neeraj, so this year we have had issues with some of our suppliers. See, there are 2-3 things which happened this year. Initially, generally we take our plant shutdown sometime in November, December. But last year we kind of extended it and we did it in April of this year. So we lost around 20-25 days of production there. Plus in Q1, Q2 as well as Q3, there have been intermittent challenges with some of our suppliers. Some force majeure events at their plants. So we have had some issues in procurement of raw material. But now if you see, when I talk to you today, those problems seem to be behind us. And as I said earlier, for Q4, we are pretty confident that we'll not have any issues and even beyond that.
Okay. And if you can just give some guidance that how has been our CPVC volume growth in the December quarter period and in the 9 months of FY24?
So CPVC separately we don't give, but it has been more or less in line with our non-agri growth.
Okay. Thanks. And I'm just waiting for that capex number for 9 months. Yeah, that's it from me.
Yeah, okay.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to 1 or 2 per participant. And the next question is from Abhishek Ghost from DSP. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just a couple of questions. In terms of the resin part of it, this quarter the production is much higher than your sales. So, Neeraj, were you referring to that data point in terms of normalization as far as the resin production is concerned?
No, that is different. What I was saying is that see, even in this quarter, our production was roughly 60,000 tons.
Correct.
Which is not we could have, if we did not have some supply issues, we would have probably made 75,000 tons. So what I was trying to say is that in Q4, the way we sit today, we don't see a challenge in producing 75,000 tons of resin.
Got that. So the 7 rupees of broad EBIT per kg that you have done, that also has an element of negative operating leverage to that extent for the division.
Yes, you're right.
Okay, got that. And just in terms of the market competitiveness, at a point in time when you are not seeing pickup in agri, do you see increase in competitive intensity by market leaders in terms of pricing and aggression? Any change in the competitive landscape that you're seeing in the marketplace?
Can you repeat that question, please? Sorry.
So, yeah, Ajit, what I was trying to understand is at a point in time when there has been delay in pickup in the agri demand, do you see a change in the competitive landscape of the PVC pipe market in terms of market leaders getting aggressive as far as pricing is concerned? Any kind of change in the landscape that you see at the competitive side?
See, there is increased competition, and there is no question about that. And when there is increased competition, there is going to be pricing pressures, especially when market is not opening up as much as we had expected. So this is fairly routine market response. We don't see anything unusual. Everybody had expected that the agri demand will start picking up in Q3, and we also expected that it will not be as robust as what we had seen in Q3 of FY23, where we ourselves saw a record-breaking quarter, and we didn't expect it to be as big as that, but should come close. But we did see the market being a little bit lukewarm, and it has not opened up yet. And therefore, yes, when the market doesn't open up as quickly as it should, there is going to be pricing pressures. So we have, which is quite normal, and that's what we are seeing at this point of time.
But in your assessment, given the feedback that you must be having from your marketing and the distributor interaction, is PVC price movement the sole cause of delay in pickup, or are there any other issues in terms of affordability, or last year has been very good? Any other dynamics also which is playing out for the agri demand pickup?
See, last year we did have a pent-up demand playing out. Okay, and therefore we saw the type of volumes which we saw last year. This quarter, so far, last Q3 of FY24, and even now, the PVC prices have been hovering around the bottom. That is $750 to $770 per metric ton. So therefore, we are still seeing the market on a wait and watch. But our expectation is that the PVC prices are not going to fall any further than this.
Plus, just to add, every demand, as we always say, you only know how a season is after the season is over. What has happened during September, there was a large anticipation in the market that the PVC prices will go down, which they eventually did in October, and that led to some pickup in the volumes. In November, one of the other spoil sport which happened was the flooding and excessive rains in large parts of the country. So that also had a negative impact on this quarter's volume.
Okay. That's very helpful. Thank you so much, and wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Manish Badane from Ashika Institutional Equities. Please go ahead.
Thanks for an opportunity, sir. Sir, if I look at the PVC prices and PVC EDC delta prices, so they are in the downward trend. So what are the factors that are impacting on the PVC prices and PVC EDC delta?
So see, it is something very unique to our industry, I would say. PVC prices and EDC prices, they are not linked to each other. Generally, if you look at a long-term trend, the EDC prices tend to lag behind PVC, but this lag could be, anything. What impacts PVC prices in India especially is, India is import dependent on PVC. So PVC domestically is priced on import price parity. So anything which happens around the world, it can impact PVC price in India. Let's take some examples. See, last year when Chinese market was down, PVC was being dumped in the country. So that led to a reduction in PVC prices, whereas the demand was good. This year also there have been, let's see now what is happening in the Gulf side. There are supply chain issues which we hear about. So these kind of things also affect the sentiments around PVC pricing and the real pricing in the country. When it comes to EDC works on different parameters. The more chlorine is generated, EDC prices will go down. So they are not directly correlated. They do follow a lag, but they more or less run independently.
Okay, sir. And my next question is, from which countries you are importing the EDC?
Generally, we get it from the Middle East.
Okay, sir. Thank you.
Thank you.
And the next question is from the line of Umar Farooq from Crystal. Please go ahead.
Hello, am I audible?
Yes, you are, Umar.
Looking at this is regarding the question regarding the PVC resin imports actually from for the past 1.5 years, if you see PVC resin have been imported into India very extensively from China, if you see dumping. And very recently,
can you speak up, please? Can you please speak up a bit?
Okay.
Unable to hear
now. Am I audible now?
Yes.
Yeah. So the question regarding the PVC imports into India. So for the past 1.5 year or two, we see PVC resin imports have been rising on the rising trend, especially from the China, if we can say as a dumping. And many local producers, domestic producers have also complained about that regarding the dumping. So how do you see going forward, if you see from the data, for the past 8 months of the fiscal 24, the imports from China are already at 80% of fiscal 23. So how does this impact going forward to the domestic PVC market? Can you give me clarity on that?
See, if you look at the numbers,
please go ahead. Neeraj, go ahead.
Yeah. So see, last year on a financial year basis, India consumed 3.8 million tons of PVC, of which the domestic producers made 1.7 million tons. So more than 50% of the PVC was imported into the country, and that is a trend which we expect to continue even in future. So import of PVC is not going to stop. Whether it is done from China or other places, it all depends on how the economy of those countries are doing. For example, if Chinese economy kind of starts, say tomorrow hypothetically starts to boom up, and their domestic construction industry picks up, they probably will be not selling as much to India as they're selling now. So this has to be looked at it from a global perspective, and these dynamics keep changing. So it is difficult to say, what will happen tomorrow.
Understood. Sure.
Ajit, you were saying?
No, it's in line with what I was about to say.
Yes.
Okay, thank you. And the next question is from the line of Asim from DAM Capital Advisors. Please go ahead.
Yeah, thanks for the opportunity. So first question is on the pipes business. So I presume, for your non-agri segment, Finolex would need to be aggressive on the ground in terms of channel incentivization and your A&P. I just wanted to know that, assuming normal industry, assuming agri volumes are normal, is there a difference between ROC profile for your agri and non-agri pipe business?
No, ROC profile is similar. See, the two different, the businesses are very different when it comes to different business dynamics. In agri, the number of SKUs is lesser, so your capex involved is lesser. There is inherent requirement for credit is not there because first funds are arranged by the customers. Whereas and the profitability is lower. On the non-agri side, while the profitability is higher, the number of SKUs is more, so your capex required there is more. Plus, there is an inherent requirement to give credit to the market. The stock has to remain in the shelves of the retailers. So the whole working capital cycle there is longer. But on an ROC basis, they are more or less similar.
So the takeaway basically is if you aggressively grow your non-agri business, or rather if it's growing faster, it will not be ROC diluted. Got it.
No, not at all. Not at all.
Yeah, and the second question is on PVC resin. I mean, just from a volume expectation for this fiscal, I think last quarter you had said that you would attempt to do 200 to 220,000 metric ton volume sales. Given the 9-month run rate and with PVC prices being range bound but on the lower side, do you still expect to reach that number?
Yes, definitely. So between 200 to 220,000 tons, we'll be able to achieve. And this, when I say, I'm talking about both internal and external sales. Huh?
Right. Okay, thank you very much.
Yeah. There was one question on the capex. So the capex that we have done in the 9 months is roughly 85 crores.
Thank you.
Yeah, you can continue, please.
And the next question is from the line of Amit Srivastava from B&K Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. So, a couple of questions. One is in terms of the PVC resin profitability, if we look at, it's a 7 rupees kg around. So we have seen that from the last quarter it has improved, whereas the PVC EDC spread and PVC the VCM spread is also lower than the last quarter. Then you have highlighted about the negative operating leverage also. So just wanted to understand that what has led to this improvement in profitability.
Sorry, can you please repeat your question? I couldn't get that.
Yeah, sir. Just quarter on quarter, I was looking at EBIT per kg for the PVC resin, which has gone up from 5.4 to 7 rupees. So our spread for the PVC EDC as well as the VCM is lower than the last quarter. So what has led to this improvement in profitability?
So if you see last quarter, in May of the year, generally around that time, our jetty gets non-operational because during monsoon we can't operate that jetty. So we stock up our stock of VCM and EDC before the jetty closes. Now this material which had come before the closure of the jetty was a high cost inventory, which we used subsequently. And that is why we saw the performance of the quarterly basis Q1, Q2, Q3. So Q1 there was a heavy high cost inventory that we used. In Q2 it reduced, and now this quarter we have not used much of a old inventory. It's fresh stock that is being used, and that is why you see the improvement.
So can we expect if the spread continues at the same level, we can be in a similar kind of profitability in coming quarters?
Yes, we can.
Okay. Second, in terms of the profitability of pipes and fittings also, we have declined on a quarter-on-quarter basis. So is it primarily because of the product mix that has led to an inventory loss, or it has an impact of sharp decline in the prices also?
See, so inventory loss and price decline are more or less the same thing. So you are absolutely right. This is because of the change in PVC prices and the change in product mix.
Okay. And in terms of our growth plan, basically, we are stronger in our west and south market, but still we are not so focused on a north and east market. So basically, in the future, what is the plan of action basically to cater to this market, because these are the large markets which is growing and a lot of peer group is moving towards that market. So is there any plan of action for that market? Are we already looking at that market, or still we are focusing on our core market?
So Amit, let me take that question. Traditionally, we have been very strong in west and south, and we have a renewed focus on the north. Okay, so it is north, west, and south are our the strong markets wherever we are strong, we want to strengthen it, and wherever in north we are aggressively going into more and newer markets. It is east where we have been traditionally weak, and we are making efforts to strengthen that as well. So it is these markets. I think all these markets are going to be important for us going forward to grow.
Yeah. So just to follow up that, basically, sir, we'll service from the same plants, or we are looking at plants closer to the market in the north or east, any kind of, because we have a future plan to grow anyway. So so what is the
so at the moment we are supplying all the pipes and fittings from the 4 plants which we have got, right? And going into the future, we are evaluating where to set up the next plant, because in the next couple of years we will need growth.
Right.
And therefore, where the next plant needs to be set up is something which is under evaluation.
And if we are supplying from these plants, we are still competitive with the plants which are already into that market, in a northern market primarily, or east we are still not there. So just to understand the northern market dynamics.
So currently we are supplying it from the 3 plants, which are pipes. We are supplying it from 3 plants, and the fittings from almost all the plants of ours is located in Pune. And so there are a couple of strategies which you can look at, which is one is distributed strategy, one is concentrated. So we have followed the concentrated strategy, given the good nature of infrastructure which we have got for road, the availability of parts, the pipes and fittings to rest of the country can be reached within 2 to 3 days. The furthermost, and therefore we have at this point of time looked at it from a concentrated perspective. In future it may be different, but that is under evaluation.
Okay, got it, sir. Thank you very much.
Thank you.
Thank you. And the next question is from the line of Sarbhav Mittal, an individual investor. Please go ahead.
Good afternoon, and thank you for the opportunity. Sir, historically, company has been generating good return on capital invested in the business and better than the competitors. So what do you think are the competitive advantages present with the company?
So, Sarbhav, let me answer you this question. See, Finolex is a company which has been existing for about 40 years. And we have been pioneers in the pipes and fittings industry. And the quality of our products is our biggest differentiator. There is no compromise in the quality of products which we produce. And therefore, if you actually see, there will be farms across the country where Finolex pipes have been used for more than 30 years and still working very well. And this is the reputation which we carry forward as well. And to also let you know that most of the growth which is coming in, of course, the urban sectors are growing. but the new growth is coming from the tier 2, tier 3, tier 4 cities. And this is where we have a very good stronghold in terms of the agri segment. And that is also translating into the non-agri segment as well. And therefore, our ability to meet the customer requirements and provide really quality products with no compromise on the raw material which is used. The PVC which goes into our pipes are probably 80% of it is coming from our plant in Ratnagiri, and this is top-notch quality wherever it is coming from the rest of the world. And that translates directly into the products we produce.
Okay. Sir, does that mean backward integration, that is manufacturing our own PVC resin, is providing some advantages? And if yes, what are they?
See, it's the quality of the resin. Quality of the resin which we produce is probably the best in the world.
Okay. And does it provide some kind of advantages in terms of cost?
See, again, as Neeraj has explained to you, we are not able to take full advantage of it because we do have a constraint.
Ajit, I think his question is different. See, resin is transferred at market rates. So there are no cost advantage as such to the pipe division. To the company overall, yes, because there is value addition in resin and there is further value addition in pipes and fittings, in pipes. But if you look at them on a segmental basis, pipe segment does not have any added advantage of cost because we are procuring from our own other segment.
Okay. And my second question would be, please correct me if I am wrong. In the past, company has been targeting the customer segment and geography which are largely avoided by other large organized players. But now that company is targeting the plumbing segment in the urban areas where the competition is very high. So how are we going into that? What are the strategies that we would apply?
So, yes, definitely we are getting into the urban segments and one brand visibility, because entering into a non-agri segment is a completely different ball game. It is much more of a push segment where the competition is quite high. And we have been a little bit slow in getting into the segment, but we have got very good traction in the last 5 years. Our growth has been outperforming the market. One of the key reasons, one is making sure that we have the complete product portfolio available, basket of products, which we have today. Second is our distribution. The distribution is something which is a key differentiator. Again, if you want to talk about differentiation, our distributors who have been with us for over 25, 30 years are our strongholds. They have very good connects with the market and have been able to represent the brand very well. So that is another key differentiator and enabler for us to penetrate the non-agri segment. And yes, when we are entering the segment, there will be price competition, and we will have to be price competitive as well to make sure that the market understands that we produce quality products in the non-agri segment as well. So the brand spend, which is necessary in terms of presence, in terms of initially we started with a mass market carpet bombing. Now we have gone into a very specific targeted segmented marketing, connecting with our market with people who are brand ambassadors and who represent our brand enablers such as the plumbers, the MEP consultants, the builders, etc. So we have very targeted market campaigns towards that.
Okay,
that was just to add, the level of interaction that is required with the plumbers, influencers, for the plumbing sanitation business. There has been a significant uptick from our side. Just to take an example, recently we launched our plumbers app, which is again trying to create a long-term connect with the plumber community. So that eventually we are expecting it to become a very strong and a key player in our strategy, overall strategy with the influencers.
Yeah, it will create the stickiness that is needed with the influencers. Yeah.
Okay. And the last question would be, what are your goals for the next 5 to 10 years, and what are the metrics that would use? What are the metrics that you would use to measure your performance?
See, our aim is to double the volumes. I'm not talking in terms of top line. Double our volumes in the next 3 to 4 years. Yeah. And improve the product mix. Currently, as Neeraj has pointed out during the call, we are anywhere between 65-35 or a 70-30 split between agri and non-agri. We would like this to move to a 50-50 split.
Okay. That is from my side. Thank you, and all the very best to you, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to 1 or 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. And the next question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the follow-up opportunity. Sir, in one of the earlier con calls, we had mentioned that for FY24 and pipes and fitting segment, we were looking for a 10 to 12 EBIT per kilo performance. So at this juncture, sir, what do we think? What would be the achievable figure? Would we be able to achieve 10 rupees?
Yes, we should be able to achieve.
Understood. Okay. And so for FY25, do we have any figure, or will we be evaluating it later on once we cross FY24?
See, gradually as our product mix improves, our profitability on the pipe and fitting segment should improve. If you recall, 4 or 5 years ago, our EBIT used to be in the range of 6 to 8 rupees, and our agri non-agri mix was more or less 80-20. Now this has become 70-30 or 65-35, and you see this improvement in EBIT. Gradually, the faster this mix improves, the faster our EBIT for the segment will improve.
Understood. Okay. Yeah, that's it from my side. Thank you, sir.
Thank you. And the next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, you are, Raj. Please go ahead.
Hi. Thank you for the opportunity. Actually, I wanted to know the outlook for FY25.
Outlook for FY25. It's at this point of time very difficult. We can only base it on overall market trends. Again, if like in the past, we expect that the construction segment to grow anywhere upwards of 15%, and therefore our non-agri segment is likely to see anywhere between 15 and 20% growth. In the agri segment, it is all going to be dependent upon PVC prices and the stability in PVC prices, and therefore very difficult to predict at this point of time. But we are looking at anyway single-digit growth in the agri segment as well.
All right. Okay. Thank you, sir. All the best.
Thank you.
Thank you. And the next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. So this on the volumes again. So for the full year, you had said 15 to 20% overall, but then things are looking slow in agri segment. What are expectations for the next year, FY25, in terms of volume? Do you stick to the same number or something else?
The expectation is growth in between 10 and 15%. Yeah.
Overall volume.
Overall volume.
And the margins for the last 3 quarters, they've been in the range of 12-13%. Any uptick expected there? Or, you've also done much higher in the past, but is it too far-fetched for now, or this is the number we can look at?
See, in the recent past, the very high margins which you saw in between FY20 and FY21 were basically on the back of abnormal PVC prices. Okay. We don't expect those black swan events to occur again. The prices are going to be much more range bound in between $750 and $850 per metric ton. So you cannot see, or you are unlikely to see paranormal profits like that. It is going to be range bound, as Neeraj mentioned. As our product mix improves more towards non-agri segment, you are going to see improvement in the rupees per kg profit margins.
So when you say this prices are going to be range bound, so what's the timeline? Are you talking about the next quarter or even a good part of FY25?
See, it is already back to about $750 to $800 per metric ton. So we are already in a more stable situation. But again, with the developments happening in the Middle East, it's a wait and watch approach at this point of time.
Okay, so as of now, this margin band is something we can continue with slight improvement, like you mentioned. All right, thank you and all the best.
Thank you. And this is the last question. It's from Tushar Vaidya, an individual investor. Please go ahead.
Good afternoon. Thank you for the opportunity. You mentioned earlier that you see that the PVC EDC spread for Q3 was good because you were using new material which was at a lower cost. How do you see, what is the situation for Q4 and Q1 FY25? Will the same low cost material trend continue?
So, to be honest, it is very difficult to predict. It's like predicting what will be crude prices tomorrow. So what we hope is that it should be range bound, but it is very difficult to put a number or even give a direction because EDC prices, VCM prices, they change on a monthly basis, and PVC prices change even on a weekly basis, and they both change because of reasons independent to each other. So it will be difficult to give any numbers for Q4 and Q1 of next year on EDC pricing, PVC pricing, and VCM pricing.
Okay, well noted. Well noted. 2 quick questions. Number one, from the power plant that we have, can we produce any extra power and sell it in the open market to improve our profitability? No. And second question, any likelihood that the anti-dumping policy of the government is going to continue?
See, there is no anti-dumping duty as of now on PVC. What the government did was they brought a quota for imports from certain countries, including China, but there is no duty on PVC import. There is no anti-dumping duty. Sorry. So that is the answer to your second question. On first question, see, we have. I don't think we can sell power in the open market. First of all, it does not become economical because ours is a thermal power plant, and we require specifically this is more or less the primary requirement of our power plant here is to generate steam. So large part of the power the coal the usage of this power is to generate steam, and that is where we use our CPP. We can't create more power and sell it in the open market.
Noted. Noted. Thank you. Thank you very much.
Thank you.
Thank you. And this was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you all for attending today's call. If you have any further questions, please feel free to get in touch with any of us. Have a wonderful day. Thank you.
Thank you. On the behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your line.
Thank you.